Hey everyone, it's Darren with Genfinity. Today we have Joe Flanagan from Maple Finance. How are you, Joe?
Very well, thanks, Darren. Great to be here. How are you?
I'm doing well. Can you give us an introduction about yourself and how you got into crypto?
Sure. I've been in crypto for a bit over 5 years now, and started obviously with the launch of Maple Finance. So my co-founder and I were working in traditional finance back in Australia, and we were working in an area called securitization, and where you were taking assets that were on a company's balance sheet off balance sheet, and we saw just how broken this process was and how difficult it is for institutions and companies to raise debt. And we weren't in crypto at the time, but when we went looking for a solution to this problem that we were encountering firsthand, that's when we came across Ethereum, smart contracts, and went down the rabbit hole from there. And then really went on an 18-month exploration where we were just funding things ourselves, building proofs of concept, and trying to work out how we can help solve the problems that we saw in the traditional finance world, with the benefits that blockchain enables. Uh, and that is why we're called Maple. And I don't think many people know this, is that one of the first proofs of concept we built was on top of Compound, back in 2019, back when Compound had 25 million bucks in it. And we built a securitization structure on top of Compound where you had senior, mezzanine, and junior notes, on top of Compound earning tokens. And that a debt stack like that with that note structure looks like a stack of pancakes, and the cash flows go down a debt stack like maple syrup over pancakes. So that's where the initial idea and the name came from.
Oh, all right, that's clever. Usually the DeFi names are a little wacky, so that one actually makes sense. Can you just give us
Yes,
like
yes.
can you give us like just a bit of an overview of how Maple works and kind of what Syrup 5, how that works as well?
Sure. So one of the things that we learned from that proof of concept with Compound is that there's no institutional quality assets that exist on chain to warrant any level of securitization or what we were trying to achieve. And so what Maple is that we built out a debt origination engine, enabling the end-to-end flow that's required for institutional debt to be originated on chain. And so that is the smart contract infrastructure that underlies all of Maple, and now Syrup as well, is that we can aggregate capital, settle loans, service loans, all end to end through our smart contract infrastructure, all happening transparently and efficiently on chain. So that's the underlying technology. Then what sits on top of that is a set of opportunities for all parties to come and lend capital to. And so this is where we're facing off against the largest institutions in the crypto space, all fully secured by digital assets. And lenders are then able to come to the Maple application, and now shortly in 2 weeks' time, the Syrup application, and access these quality institutional yields that are generated by institutional loans to the largest counterparties in the crypto ecosystem. So we've been able to leverage that core underlying infrastructure into this marketplace for quality yield opportunities.
So, with the interest, can you go into a little bit more detail on how the interest is acquired? There's been, it's just people get nervous with interest. So, how does it work?
Yeah, and I think that's one of the key things to identify here, is that this is real yield that's being generated. And so you have the largest counterparties in the space that are taking out large loans fully backed by digital assets. And then the interest that is being generated is the interest that they need to repay on these loans, that is normally on a recurring basis. So they're normally making interest payments every 30 days. And the great thing about the underlying Maple infrastructure is that all of these things are memorialized, and the transactions are happening on chain. And so you can come into the Maple application and view it directly on chain, the loan that has been issued, when is the next interest payment coming, when has that interest payment been made, and seeing the complete flow of funds end to end, from that loan being funded to the interest payments going through to the loan ultimately being repaid. And so that transparency is one of the core principles of Maple and now Syrup, is that we are using the benefits of blockchain technology in order to provide that level of verifiability and transparency. And I think that's one of the key lessons that we're taking away from the blow-ups of last cycle, is that there were lots of supposed institutional lenders in the space that were centralized entities, where you were lending into a black hole. You had no ability to verify the information or the generation of that yield. And that is really the major problem that Maple's core infrastructure solves, and one of the values that we're most proud to uphold and maintain.
So what does the Maple token do? And is there a syrup token as well?
Well, that's one of the exciting things that's coming up, is that we will be transitioning the Maple token to the syrup token, and so all existing Maple holders will be able to convert their Maple tokens into syrup tokens. And then we're using it as an opportunity with the launch of Syrup Finance to reinvigorate and rejuvenate the broader Maple ecosystem and the community that sits around it. And so the Syrup token will be launched in early Q4 is the current plan. And there's two main ways to participate in that. One is to be an existing MPL holder, and then you will be able to convert your MPL holding into Syrup tokens. And the other is that with the upcoming launch of Syrup, being Syrup Finance, our new application for permissionless DeFi access to these same quality institutional yields, you'll be able to participate in a reward system. And so that reward system is called DRIPS. And so for depositing in and committing your capital into Syrup upon launch, you'll be able to receive DRIPS and then ultimately convert those rewards, those DRIPS, into the Syrup token. And so we're super excited about being able to bring Syrup Finance and bring institutional yields and the institutional lending platform that Maple has been able to produce and serve for the last 3 years, and bring that to a much broader audience across permissionless DeFi. And so that's going to be a great moment in time where we're bringing together the product and the underlying users of that product and the Syrup token and the community members. And so they'll be able to access and actively participate in the product that we're producing, as well as being part of the community and token holders.
Is there a governance aspect? Can you vote with the token?
Yeah, so the two main things that will be upon a launch of the Syrup token is, one, that it is a governance token. And then the other exciting element will be that we will introduce staking. And so you'll be able to stake your Syrup tokens, and what that does is that you then participate in the overall growth of the ecosystem. And so for depositing and staking your tokens, your Syrup tokens, you are then generating and earning a yield from the overall revenues of the protocol. And so it actually, what the underlying mechanism is that we generate yields in USDC and other assets, and then there is a purchasing and distribution of Syrup tokens. So when you stake, you're actually generating a yield in more Syrup tokens. And so that will be upon that launch in Q4 as well.
Okay. So I saw that it's 219 million in TVL that's listed on the Maple platform. Is there more demand than 219 million, or is that just what you're able to get the collective to stake?
Yeah, so we are fully utilized at the moment, and have been over the course of the last 12 months. And so there is much more borrow demand than there is USDC or asset supply on the lending side. And so we have much more potential to grow and to service the largest institutions in the space. And so that's why we're excited about the launch of Syrup. But we're also excited about the growth trajectory that we've already been on to this point. If you look back to 12 months ago, we were only at about 20 million in TVL. So we've 10x'd over the course of the last 12 months. And we will be looking to hopefully do the same again over the course of the next 12 months through the combination of Maple and the accredited investor access that we have there, and continuing to grow that business. And then the introduction of Syrup, and Syrup being able to be accessed by the broader DeFi ecosystem.
Oh, that's quite a growth, right? 10x. It's you don't see that in traditional finance, right? That's something that's unique to crypto. I just noticed some familiar names as borrowers on the Maple site. Are you allowed to speak about any of the borrowers that use the platform?
Yes, some of the borrowers you'll see in partnership announcements and different things. We don't disclose like the specific name of the borrowers because there is a need to preserve some level of privacy here. But what you do get from a transparency perspective is all of the loan details, all of the interest details, and all of the transaction flow that's happening on chain. Um, but the counterparties that we're talking about here are the largest institutions in the space. So these are exchanges, OTC desks, market makers. Think about all of the different participants that need to exist in order to continue to grow the broader digital asset and crypto economy. They're the institutions that are the counterparties that we're lending to. And I think it's maybe an important thing to note is that there's a lot of talk of institutional adoption and the institutions from traditional finance coming in to the crypto economy. And I think we're seeing that more and more, yes, and that's fantastic. But I think the other way to think about institutional adoption or growth is that we should be facilitating the creation of new institutions that are crypto native institutions and a thriving debt marketplace and a credit economy is essential to building out a broader and growing the broader crypto economy. And so that's what we're really focused on is servicing digital asset institutions and facilitating the further growth and proliferation of the crypto economy.
It's interesting that you say that because Bank of America or something's not going to lend out any crypto, right? Like they don't have the crypto to even lend out. So if we were to get some type of comprehensive regulations where banks are allowed to dip their toe in the space, there needs to be lenders of crypto assets in general. So it's interesting to see that. So treasuries and other real world assets. I saw Maple had an announcement related to RWAs. Can you speak about that or expand on that?
Yeah, so Maple, so we've done a little bit in the RWA space, and so we do have a treasury yield offering where we're seeing a number of corporate treasuries deposit in or other funds and counterparties park their capital whilst they're waiting for their next deployment or uncertain about what's happening in the markets and where they want to participate. So we think that's interesting, and there's obviously a lot of hype around bringing treasuries on chain, and there's a number of parties that are trying to do it. What we would argue, though, is that within that, is RWAs maybe a little bit of an overused term, and that bringing treasuries on chain is a nice step, but not overall that exciting. And we would say that the private credit that we are originating directly on chain to the largest institutions, that is real assets. Like this is real yield that's being generated, and this is real economic benefit that's being created. And so I think there's maybe needs to be a separation between just bringing traditional assets that are not on chain and bringing them on chain, and that process versus the creation of real underlying assets that exist on chain from a primary issuance perspective. And how that is helping to broaden and grow the economy.
So with the success of Maple and now having over 200 million in TVL, what are the next growth opportunities that you see?
Yeah, the thing that we're most excited about is the upcoming launch of Syrup, and so just to reiterate, so Syrup is the same underlying infrastructure of Maple in that it's the same smart contracts, it is the same quality institutions, it is the same borrower network, it is the same master lending agreements, and all of the work that we've done over the course of the last 3 years to build up a strong institutional credit business is the core base that exists behind Syrup. So we're leveraging all of that previous work, but then enabling broader DeFi access. And so now you'll be able to come to Syrup.fi and you'll be able to lend and access the yield that we've been generating on the Maple side, but now in a permissionless DeFi way. So that's what we're most excited about is that upcoming launch. We're then also excited about the ecosystem that can be built around that. One of the things that we haven't been able to do on the Maple side, because we are permissioned within Maple, is that we haven't been able to benefit from the broader interoperability that that the DeFi ecosystem enables. And so with Syrup, we'll be able to take the underlying token that you receive upon deposit, so it'll be Syrup USDC or Syrup USDT, and then you can take that asset and then use it throughout the broader DeFi economy. So you'll be able to post it into AMMs for immediate liquidity. You'll be able to use it as collateral on other lending protocols. And so we really want to use it as a catalyst to build out an ecosystem around Syrup and around the quality institutional yield that underlies the assets that we're originating. If you think about the DeFi landscape at the moment, you've got Athena, and if you think about the DeFi landscape and the real yield opportunities that exist, you've probably got like three major ones that exist. You've got Athena and them unlocking access to the basis trade. You've got Maker and everything that sits around and on top of the Maker ecosystem. And now you'll have Syrup. These are three real but differentiated yield sources. And so we're super excited to see how Syrup can be a bedrock yield asset that's secure, institutionally sourced, to then enable the growth and build out of new financial primitives on top of it.
So, can you elaborate on where the yield for Syrup comes from? And also, is there any mechanisms for risk that are involved?
Sure. So, the underlying loans that will be originated for Syrup will be to large institutions in the space, all fully secured and backed by digital assets. So, if we use an example, we would take in for a loan of $100, we would take in $140 worth of Solana as collateral. And so these are over collateralized loans to the largest digital asset institutions in the space. So there is real protection, not just from the counterparty that you're facing, but also importantly from the collateral that's being taken. And so what we'll be able to provide when you do deposit in is that you can see transparently, here is the number of loans that is being issued, here is the total value of those loans, here is the total value of the collateral that backs those loans, and see the ratio of collateral versus loan value to see the level of protection that you have in place. And so that's what we're really focused on from a risk perspective, is that two-pronged attack. One is the collateral that we're taking and the protection that we get there and the ability to liquidate that in any market or counterparty risk event, as well as then the counterparties that we're facing. This is not facing retail participants. These are large institutions with large balance sheets that are able to service margin calls and the volatility that exists in the crypto economy.
So, can you explain why retail would want to use Syrup versus Maple, or Maple versus Syrup? Like, what differentiates it for somebody that wants to lend?
Yeah, the key main difference between Maple and Syrup is Maple is a permissioned protocol, so you have to go through full KYC, and it's for accredited investors only. So that means that it's accessible within the United States to accredited investors and outside the United States for accredited investors. So it's very much targeted to that audience. Syrup is for broader permissionless DeFi. And so this is, you can think about the underlying products that exist there being very comparable, all of the same infrastructure, all of the same risk profile and characteristics that are being followed, but just in terms of a different level of distribution, where one is to an accredited investor audience going through a permission structure, and the other is through broader DeFi access.
So, it lists some of the pools giving 20% interest. Do you think that's going to be sustainable over the long term?
Yeah, interestingly, we've been able to maintain that for a significant period of time now. And so, to speak to the opportunities that exist within Maple, is that we have two kind of buckets. We have one that's a lower risk bucket and one that's a higher yielding bucket. And we think that the lower risk bucket is just where we're taking Bitcoin and Ethereum, and it sits in third party custody. The other is where we're taking a broader basket of assets, so Solana, staked Ethereum, and maybe some other types of tokens, still fully over collateralized, but able to generate more of a yield on there. And so that's why we're able to differentiate between those two different risk profiles and generate those high yields up to 20%. So we've been able to, for the last 4 months, 4 consecutive months, we've been able to, in that high yield strategy, generate 20%. Our target yield for Syrup is 15%. I think at the outset, we'll be able to beat that. But that's with that expectation of it being a blend of those two strategies that I've outlined on the Maple side. So it will sit somewhere in the middle of a risk profile and target 15% over the long run. Plus, then early participants will be able to earn drips and receive the uptick in yield and in yield generation through that reward system.
Do you think the traditional banking system is going to be able to compete with the crypto economy? It seems like you're bringing costs down to its lowest possible amount to lend and borrow.
Yeah, I think it's I think it's going to be interesting. You're seeing today a lot more institutional participation or intrigue into the digital asset economy. A lot of them have different pilots that they're running internally, but these are all where they're trying to really merge their existing infrastructure and setup into some sort of digital asset setup. The great thing that you have with Maple and other crypto native companies is that we're not starting with any of that legacy technology in place. It's starting afresh. It's directly on chain and maintaining all of the principles that we all love about crypto. So what will be interesting is if any of the larger institutions in traditional finance are able to maybe cross the chasm or jump that gap and just start building natively on chain rather than thinking about it as a merging from their existing infrastructure onto the blockchain and trying to plug the two together. And that's where, what I was speaking about before, it's exciting to see traditional finance coming on chain and adopting things more broadly. But what I think is much more exciting and what we're trying to facilitate in the short and medium term is the creation of new institutions and their growth that are crypto native institutions and are supporting the broader crypto economy rather than just thinking about it as a wait and see type of plan for when a large traditional finance comes on chain.
Can you discuss any particular achievements or milestones that you're proud of?
Yeah, well, the one I spoke to before on our 10x growth over the last 12 months is a real point of pride for the team. I think the other thing is that we've been able to survive. Anyone who was in lending during last crisis or last cycle and the crisis that evolved there is no longer in business. So all of our direct competitors that were CeFi lenders back in last cycle no longer exist. We do, and it wasn't easy, and we really grinded it out. But I think it speaks to the benefits of our underlying technology and infrastructure, the fact that we are crypto native and directly on chain, and I think a little bit to the resilience of Sid, myself, and the rest of the team, and that a long-term vision can really hold you in good stead when you're going through the bad times, and then makes you hopefully enjoy the good times even more.
Yeah, I mean, it's probably your background and your idea of risk management. Most of the failures, it was people that really didn't have any business in the lending business, got involved. So is there anything that I missed that you feel is important to talk about?
No, I think that's been a great overview. Really encourage anyone to go along to syrup.fi, sign up for early access. We are going to be launching on Tuesday, the 25th of June. And that's when an early access period will begin. And so you do need to have an access code and have signed up in order to be able to participate and be a part of the drip reward system. So head along to syrup.fi, check it out, and the team will be there to answer any questions that anyone has.
So where can we find you? Where can we find more about Maple Finance, Syrup?
Yeah, you can follow us on Twitter or X, I should say, So it's at Maple Finance, at SyrupFi, and my handle is at Joe_DeFi. And then you can also find all of the information on maple.finance is our main URL for Maple, and then syrup.fi is where the new exciting protocol is going to be sitting.
Well, I appreciate your time, Joe. It's nice to meet you and nice to learn about syrup and maple. It's been a pleasure.
Awesome. Appreciate it, Darren.
Thanks.